Good morning, viewers. A warm welcome. Sage here. You're watching 𝐊𝐿𝐴𝐼𝐼 TV live from Sydney. This is the Global Markets Roundup show, and in today's show, we'll explore the latest updates from the equity, currency and commodity markets from across the globe. Let us first look at yesterday's US market performance. The US stocks fell from record highs on Tuesday, while real US bond yields hit all-time lows as a sell-off in Chinese shares, economic growth concerns and the Federal Reserve's policy meeting put investors on guard and drove profit-taking. MSCI's gauge of stocks across the globe shed 0.81%, and the tech-heavy Nasdaq Composite Index closed higher on Wednesday, 28th July, a day after the big technology companies like Google, Apple and Microsoft posted strong quarterly earnings, while the blue-chip S&P 500 and the Dow Jones saw small gains in an unremarkable trading session. The S&P 500 fell 0.02%, the Dow Jones shed 0.36%, and the Nasdaq Composite rose 0.70%. The small-cap Russell 2000 ticked up 1.51%. Investors were upbeat after the Federal Reserve reiterated that the US economic recovery is on track despite the threat posed by the Delta mutant of the COVID-19 virus. In addition, the solid earnings reports of some of the major corporate houses added to the positive sentiments. And the central bank on Wednesday decided to maintain its current interest rates after the conclusion of its two-day meeting to discuss the progress of the US economy. The participants also decided to maintain the bank's bond purchase policy that has been blamed for inflation in some quarters. Fed is scheduled to release its personal consumption expenditures price index on Friday. The index is considered an important metric to gauge the country's inflation. In Wednesday's trading, the healthcare stocks provided the most significant boost to the S&P 500 index, even as communication and energy shares saw major gains. However, 7 of the 11 critical sectors of the index stayed in the negative territory, with utility stocks making up the bottom rung. The drug maker Pfizer Inc. said that it expects its sales to rise by 30% this year, more than its initial projection in April. And on Wednesday, it's reported a 92% revenue growth in the second quarter. Its earnings per share were $1.07 US. The Pfizer stock jumped more than 3.4% after the results. And the world's largest aerospace company, Boeing, reported its first quarterly profit in almost 2 years with a revenue boost of 44%. Its stock jumped nearly 5% on Wednesday. Let's move on now to the futures and commodities. The gold futures were up 0.34%, silver increased 1.40%, while copper fell 1.51%. The Brent oil traded flat and WTI crude increased 1.02%. Over to the bond market now. The 30-year Treasury bond yields were down 0.37%, while the 10-year bond yields traded flat and the US dollar futures index decreased 0.17%. So this was the latest from the US markets, and now it's time for a short break. Please stay tuned as we will soon take a look at the European markets.
Hi, this is Andy Liu broadcasting from 𝐊𝐴𝐼 Media Studio in Australia, and I'll be hosting the new 𝐊𝐴𝐼 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐴𝐼 TV and join me.
Welcome back, viewers. Sage here. You are watching 𝐊𝐼 TV live from Sydney, and this is the Global Markets Roundup show. Let us take a look at the European markets, just as promised. The European stocks lost ground on Tuesday after falls in Chinese shares and the British multinational consumer goods company Reckitt Benckiser's warning on margins ahead of the earnings updates from the big fashion retailers later in the day, and the Pan-European Stocks Index fell 0.5% in its second straight session of losses. The government bond yields across the euro area fell on Tuesday, with German bond yields holding close to 5.5-month lows hit the previous session, while the real bond yields slipped to fresh lows, and the weak equity markets undermined by a third straight session of selling in Chinese internet giants supported demand for safe haven bonds. But overall activity was generally subdued ahead of a two-day US Federal Reserve meeting starting later. The major European markets also traded in positive territory, and the German blue chip DAX index was up by 0.19%, while the CAC 40, the benchmark index of France, was up by 0.73%. Let's now take a glance over at the UK markets. The London Stock Exchange FTSE 100 was trading in a positive zone after starting the week in the negative terrain, and the blue chip index reclaimed the 7,000 level, boosted by the gains in Barclays plc stock, which was up by 4.2% after a positive result by the lender, and the bank's total income rose to £11,315 million, and it also announced £800 million of dividends and share buyback. Barclays is the first major bank to announce dividends for its shareholders after the Bank of England scrapped the payout restrictions on the banking sector. And meanwhile, mid-cap focused FTSE 250 was up by 0.86%, and the British housing prices fell marginally by 0.5% in July compared with June's month. And after the deadline for the stamp duty holiday for the home buyers passed, the stamp duty savings for the home buyers have been outstripped by the nationwide rise in housing prices, which are 10.5% higher than last year's prices. And so this is how the European market performed yesterday. It is time now for a short break, but after the break we'll take a look at the stock market from Asia and Australia, so please stay tuned with 𝐾ALKINE TV. Welcome back, Sage here. Viewers, you're watching 𝐾ALKINE TV live from Sydney, and this is the Global Markets Roundup show. Let's take a look now at the stock market from Asia and Australia. Starting with the Japanese market, Japanese equities rose on Tuesday, tracking overnight gains on Wall Street as investors cheered upbeat corporate earnings, but the benchmark Nikkei 225 failed to close above the 28,000 key psychological level for a second straight session, and the broader topics climbed 0.64%. Now we'll take a look at China's market. Shanghai Composite of China was down by 0.58%, and China's onshore and offshore yuan gave up intraday gains on Tuesday afternoon and eased to their lowest levels in more than 3 months as sentiment soured after a sharp sell-off in the country's equity markets. And now moving on to Hong Kong's market, Hong Kong's benchmark index and Chinese A shares extended sharp losses to end at multi-month closing lows on Tuesday as investors worried over the impact of tighter government regulations. And in the equity markets, Hong Kong's benchmark Hang Seng index fell 4.22% to its lowest close since November, bringing its losses since Thursday to more than 9.5%. And the Hang Seng Chinese Enterprises Index closed 5.08% lower. Let's now take a look at the Indian market. India's Nifty 50 closed down by 0.24%. And time to take a look at South Korea's market. South Korean shares ended higher on Tuesday, lifted by the solid domestic economic data and overnight gains on Wall Street ahead of the major tech companies' earnings and the Federal Reserve policy meeting. Both the won and the benchmark bond yield rose. The Kospi closed up by 0.24%, rebounding from a 0.91% decline on Monday. And finally, we'll take a look at the share market closer to home. The Australian share market is on a high side today, Thursday, after US stocks closed. Little changed overnight despite the US Federal Reserve giving no clue when it might begin to taper its government bond purchase. However, the Fed is yet again saying that economic recovery is on its way, even as the coronavirus infections were rising. And stocks of major energy companies such as Santos and Woodside Petroleum could trade higher on Thursday. The leading gold mining stocks, including Northern Star Resources and Newcrest Mining, could trade higher on Thursday as well. So the slowing Chinese demand for construction material hit Shanghai steel futures, which dipped for a second straight session on Wednesday. And on the Dalian Commodity Exchange, the iron ore edged up 0.2% to reach 1,137.50 yuan a tonne. And that's all now from the Global Markets Roundup. Stay tuned with Kalkine TV for more live market updates, and we'll be back with more news on the markets, economy and diverse themes and sectors. Sage signing off.